live from Beaver Creek, Colorado. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, highly anticipated edition of class number 3, Wall Street and Math Magic, presented by Jeremy Alexander Newsom and Mr. Joel Akanen. Folks, boys and girls, traders, investors, friends from around the world, how is everyone doing on this illustriously beautiful Thursday night? For those who are here live, thank you for being here and for spending your time with Joel and myself today. I truly appreciate it. Just to make sure you can hear me and see my screen okay, throw in a 1 for all those who are here. Let's see who's here. Benjamin's back for more. My buddy David. Evelyn Ramsey's here. Kai is here again. Kaz, Nathaniel, Sylvan, and Vaughn. Beautiful. Just want to say thank you so much for being here, Benjamin and Vaughn and David. I really appreciate it. Evelyn, it means a lot to me that you are showing up, that you are working on growing, that you're working on progress, that you're becoming smarter. I love that so much. Let's dive right in. Tonight's class is going to be so intriguing. I think you're going to absolutely love it. Joel, tell us what the heck we're looking at on this screen right here.
All right. Well, we are going to we're going to talk about mutual funds, a little bit different than just investing in a single stock. And the important thing to know about mutual funds is that you can purchase them. We talked about a broker yesterday. Well, you can purchase mutual funds through your broker as well. You can purchase them directly from the mutual fund company. But all these fine places, Morgan Stanley, Bank of America, Citigroup, Credit Suisse, they will offer a wide array of mutual funds for you to invest in.
Yep, absolutely. So these are just companies a lot of you might have heard of. Type in a 3 if you have all heard of Bank of America. Your parents probably bank at one of these places, either Morgan Stanley, JP Morgan, Bank of America. But all of these companies are companies that offer opportunities to get into a mutual fund. So what exactly is a mutual fund, Joel?
All right. So a mutual fund is a little bit different than investing in one individual stock. It's a way to own a bunch of stocks with one investment. And so it's just not you buying an individual stock. There's a lot of other investors, numerous investors own a mutual fund with you. So, you're kind of in there with other people, investing with other people, and it's a little bit more of I'd say a family or group atmosphere. And the purpose and the reason for this is diversification. If you just take all your money and you put it into one stock, right? Something negative could happen, to that company, to that stock. And if you have all of your investment in that one stock, and the stock goes down, then you're going to lose money. But when you put money into a mutual fund, they're pooling all the money from all the individual investors, and they're buying little bits of a bunch of different companies, right? So you're not subject to single stock risk. You also have a professional manager, someone that it's their job to run the real life trading mutual fund. Jeremy's in charge of that. That's his full-time job. So he has to look at the investments. He has to manage the fund. And through investing in mutual funds, you don't do it that often. You invest in a mutual fund, you hold on to it for a long time, so your transactions cost or your broker's cost are lower. So it's kind of investing as a group to get diversification and also to lower your cost of transactions.
And what we're going to do for you all, ladies and gentlemen, boys and girls, is we're going to show you how you could build your own mutual fund. We're going to show you what that looks like. We're going to show you how you could go in and create your own diversification and your own basket of stocks that are invested into numerous different companies so that you can be an owner rather than just a consumer. Remember, we talked about that as being a really, really key important aspect into trading. So what we're going to be doing is we're going to pretend that 1,000 students each have $10 to invest. And what we're going to do is we're going to be a portfolio manager tonight. And as a portfolio manager, we must invest in different stocks and of different companies. So what we're going to do is we're going to take a percentage of 4 different industries and spread our money over those industries. And those industries are going to be toys, computers, candy, and fast food restaurants. But before we dive into that, let's do a quick math poll. A lot of you love math. Let's test out those skills again. If 1,000 students each invest $10, how much are we going to be investing in this particular adventure? So here's the poll. Let's see if you all can get the correct answer, because there is one answer that is the 100% correct answer. All right, going to keep that poll open for 3, 2, 1. Close the poll. Boom! Another 100% showing. Woo! Nicely done, team. So you're absolutely correct. 1,000 students each investing $10 means that's going to be $10,000 invested in the mutual fund. Did you have any questions, Joel?
No, I was just going to say, Vaughn, our math wizard here, he was jumping the gun on us. Great job, Vaughn.
Yes.
You figured it out. We got $10,000 to invest in. How are we going to do it?
Exactly. So how are we going to do it? So we're going to be splitting up that $10,000 in our own created mutual fund. So what this is going to look like, boys and girls, is you're going to be taking that $10,000 and we're going to be splitting it up into each industry. So you're going to take 4 different industries. As you all know, toys is different from computers, and computers are different from candy, and fast food restaurants are different from computers, toys, and candy. Now, remember, this is just an example. In the real world, in the future, when you all decide to be your own money managers, you can decide and determine these percentage amounts. Maybe you want to put more money into computers and less money into toys. And you want to put more money into candy and computers and less into toys and fast food restaurants. That's absolutely okay. That's entirely up to you. 100% your choice. You get to make that determination over time. But when you do, it should most likely equal 100%. So again, a really quick math question. Here we go, another poll. And the poll is going to be, if we have $10,000 to invest, you'll notice that 40% is going to toys. How much is 40% of $10,000? How much is 40% of $10,000? So we have this poll open. We're going to see if we can get 100% correct answers again for the second time in a row. And ladies and gentlemen, boys and girls, we can't shake you. Unstoppable. 100% correct. $4,000 is 40% of 10,000. Give yourself a round of applause. That is absolutely sensational. I love it. Great stuff. Beautiful, beautiful, beautiful. Okay, so let's go ahead and hop into the next slide. And you're welcome to go ahead and write in actually how much would be in each industry, in each little basket. So if 40% goes into toys, that is $4,000, right? So how much would be going into computers? If computers are 20% and you have a $10,000 mutual fund and you're diversifying, right? You're taking that money, you're taking that capital and you're spreading it around. How much is 20% of $10,000? $2,000. Absolutely. Vaughn has already gotten all of it. Vaughn, I love it. Congratulations. And everyone else, I think you could figure out the rest from here. 3,000 and 1,000. And all of those numbers, I double checked it. They do add up to $10,000. So let's talk about toys. Joel, what do we got on toys?
All right. So we are going to invest 40% or $4,000 of our $10,000 into two toy companies. And those two toy companies are Hasbro, as you see the symbol up there, and also Mattel. Toys R Us is not around anymore, so those are the two toy companies that we are going to invest in. So I don't know if we have a poll here, but if we have two toy companies and we're going to put half of our investment in each of the companies, how much do we put in? This is a little repetitive, but once again, how much are we going to put into Hasbro and how much are we going to put into Mattel? Okay, everybody is on a roll here. Okay, so we're going to put $2,000 into Hasbro. We're going to put $2,000 into Mattel. But next thing, we got to do some more math here, and we have to figure out how many shares we can purchase of each stock, right? Because we all know that stocks do not trade at the same price, right? Every stock is different. So here are the two toy companies. We got $4,000 to put in. We're going to put $2,000 in Hasbro and $2,000 in Mattel. So now the next thing, what do we need? Here's a question. I don't think we have a poll for it. We know we're putting $2,000 in each. How do we figure out how many shares to buy of Hasbro? How do we figure out how many shares of Mattel to buy, right? What do we need? We need the price of the stock, correct? So we have Hasbro, which we're putting half of our investment in, or $2,000, is trading at $87 per share. So what would we use? What math property would we use to figure out how many shares of Hasbro? We don't have a poll for this, but okay. Oh man, these guys are incredible.
I love it.
Division.
I love it.
Right. Okay. So 2,000 divided by 87 is how many shares of Hasbro you got. All right. Mattel, it's a lower price stock. It's trading at $14. So you do 2,000 divided by 14. So we've used multiplication so far, and now we're using division to figure out how many shares. So if you do 22 times 87, it comes out to 2,000. And then 142 shares at $14 comes out at 2,000. So they're different price stocks, okay? But your dollar amount is equally invested.
Yep, very beautiful example, Joel, and great job, boys and girls, for getting that absolutely correct. I'm very proud of you. So this is an example of, again, taking that money and splitting the money up into different toy companies. So you are fully using that $4,000. You're taking $4,000, putting it into two different toy companies, and you're able to buy 22 shares of Hasbro and 142 shares of Mattel. And so next, what you can do is you can go and find a different industry. Now remember, these are just an industry that are chosen for you. You by no means have to do these exact stocks when you get older, or your parents, they don't have to do these either. But these are three really powerful computer companies. You've all heard of Apple, you've all heard of Microsoft, and you've probably all heard of Dell. So since we're taking 20% of our $10,000, that's $2,000, and the examples and the steps are the exact same. Once you have the amount of money that you're going to be investing in the stock based on your math and your percentages, you then simply allocate that fund to then go buy those amount of shares of the stock. So what we're going to do is we're going to split up this $2,000 into three different companies. Half of that $2,000 is going to go to Apple. 1/4 of that's going to go to Microsoft, and the other quarter is going to go to Dell. So boys and girls, true or false? 1/2, 1/4, and 1/4 equals 1. What do you all think? 1/2, 1/4, and 1/4. True or false? Equals yes. It is true. It's absolutely true. So, next we go into this particular slide. So again, that will be $1,000. That's 50% of $2,000 is $1,000. 25% or 1/4 of that is $500. And 25% is 1/4, which is, again, $500. And 1,000 plus 500 plus 500 equals 2,000. So when I was doing this example, Apple was trading at $188 per share. Microsoft was trading at $118 per share. And Dell was trading at $60 per share. So obviously, if we're going to be taking our money and dividing it out, that's how we calculate the amount of shares to buy. Now, as Nathaniel beautifully mentioned, there's actually a little bit of excess money left over that could be used for something else. Because if you go and divide 1,000 by 188, what you're going to get is actually kind of a weird number. So 1,000 divided by 188 is actually 1,000 divided by 188 is 5.3. 5.3. So you actually have a little bit of excess money that you could use for one of the other purchases if you wanted to. Back in, how long ago was that, Joel? 10 years ago? No, it was 20 years ago. 20 years ago, you could buy stocks in fractions.
Right.
But you no longer can. So now, for most of your investment purposes, you have to buy stock in full share increments. So instead of 5.3 shares, boys and girls, you would be having to buy 5 shares. Now, let's do a really cool math question. How much would that 0.3 be?
Ooh,
Ooh, who can do that? How much would that 0.3 be? I'm really excited to see who can get this correct. All right.
My money's on David.
How much would 0.3 be? And I'll show you how you can do the math. I think I can do the math. So here's 1,000 divided by 188. And what you're going to come up with is 5 point. There's actually a few different decimals in here. So 188 equals 5.31914. So it keeps going on forever. So what you would do in this particular situation is you would take the 5 that is remaining, right? So you take the 5 and you multiply that times 188, so you know how much you're buying, because that's how much you're buying for sure. So you're spending $940 for certain, right? $940 for certain. So if you have 0.31914, you can multiply that times the exact same amount, and you're going to get $60. Actually, you're going to get $59.99, which would give you the ability to actually buy one more share of Dell computers. Now, we didn't do that in this example. We didn't round and take the rounding numbers and kind of apply it to different stocks. But I'm really happy that all of you know that it could be done that way. So Vaughn, congratulations. Evelyn, you got very close. I love it. Super good job, team. Wonderful, wonderful work. So now you'll notice the very similar problem with Microsoft is if you take $500 and divide it by $118 per share, you're actually going to be able to buy 4.23 shares. So since you can't do that, you can only buy 4. So again, technically, we could have taken 0.3 and 0.23 and bought more shares of Dell Computer if we wanted to. That's something that you could do, again, when you decide to be your own amazing money managers. Vaughn says that's $28 left over. Vaughn is on fire. I love it. So again, that's something that you could do as time progresses. As you get better and better at investing, you can take leftover money and put it into something else if you want. But same thing down here. This math is a little bit more clean. $500 divided by $6 per share is 8.33 shares. So again, this would be 8 shares of Dell Computer. Joel, tell us about candy. We had numerous children in class 1 talk about how much they love Hershey's. So we're using Hershey's in this example. Let's talk about candy, Joel.
Okay, all right. Everyone knows about Hershey's, the Great American Chocolate Bar. So we have 30% of our fund to invest in candy companies, right? So 30% of 10,000 gives you $3,000, right? So we have 2 companies. Mondelez, that makes those yummy Chips Ahoy's that I like to dip in milk, and also Oreo cookies and all that good stuff. That's what Mondelez makes. And then everybody knows what Hershey's make, the Hershey Kisses. So it's pretty simple math here, and Benjamin White is ahead of us as always here. If we have $3,000 to invest, and we're going to have only 2 companies, we're going to put $1,500 into each company, right? Because we want to have the equal amount of money into both companies. So 50% of 3,000 for Mondelez equals 1,500, and then 50% of Hershey's is also 1,500. Now that gives you $3,000. But once again, we're going to run into the same problem that we did with the other examples. Not every stock trades at the same price. So we're not going to be able to buy the same amount of shares of each stock. So let's move into that example, and let's use some of those same basic math principles that we talked about today and figure out how many shares we have.
Let's do it.
Okay, so Mondelez, it's trading at $49 per share. I wish it was trading at 50 because it would be a lot easier example, okay? But we have $1,500 to invest in Mondelez. It's trading at $49 per share. So what are we going to do? We need to use the division property again, right? To figure out how many shares of Mondelez we could buy. So 1,500 divided by 49 equals...
What does it equal, boys and girls? What do we got?
Okay, there you go. 30 shares. Great, Vaughn. $30, 30 shares with a little pocket change left over. 37?
Nope, it's
No.
30.
It's 30. Okay. All right. So 30 shares of Mondelez, and just a little, little pocket change. We could use that to, buy a little bit more of some of the other stocks in the company. But let's go back again to the math. All right. So if Hershey's is trading at $111, we are not going to be able to buy nearly as many shares of Hershey's as we did Mondelez. But once again, we'll use our division property, and we will do 1,500 divided by 111. And that gives you 13 shares. So even though you have more shares of Mondelez than you do Hershey's, you still diversified. You still have put half of the assets that you want to invest in toy companies. You got half in Mondelez and you have half in Hershey's.
I love it. And what I'm going to do, boys and girls, really quickly is take you on a fast tour of the Mondelez chart. Because this particular chart is so amazing. I just love it. Absolutely. So check this out. This chart goes all the way back to 2015. And look at how many opportunities you could have bought MDLZ, which is Mondelez, and you could have bought it and sold it numerous times. So right here, you could have bought it at 39 and you could have sold it at 46 and some change. And then it came all the way back down to that particular price right here again on a second separate occasion. And then it traded all the way back up to that particular price. So you could have done that exact trade 2 specific times, buying MDLZ at $39 and some change, selling it at 46 and some change, coming all the way back down to 39 and trading it all the way back up to 46. Let's do one other really fun math question. What percentage gain would you make if you bought MDLZ at 39.04 and sold it at 46.56?
Oh,
Woo!
boy.
Who could do that math for me?
Man, I don't even know if David can do this one.
Evelyn says it will soon fly. Already a stock trader. I love it.
And this wasn't part of the prescribed course. Jeremy will come up with the answer here in 1 second. But what you're looking at here in Mondelez is a trading range. Okay, so there's a lot of stock. There's a lot of stocks that go straight up. There's a lot of stocks that go straight down. But there's a lot of stocks that will just be in a trading range, and this is and you have to identify that when you're looking at a stock. Is it trending up? Is it trending down? Or is it in a trading range? And this particular one is in a trading range, but Evelyn, who's going to grow up to be a breakout trader, is saying, hey, it finally cleared the upper end of that boundary, and she is looking for continued gains. So, Jeremy, go back to the answer of that question.
Beautiful. I love that. So, yeah, let's talk about how you can come up with that answer. So if you have 2 numbers and you know both numbers, it's very easy to come up with the percentage gain. So if you buy a stock at 39.04 and the stock goes up to 46.56, what you have to do is some subtraction to determine the difference between those 2 numbers. So the difference is 46.56 minus 39.04. And what you come up with is $7.52. So that is the difference between the 2 numbers, but that's not the percentage. So the percentage growth is you take $7.52, which is the difference in how much it changed, and you divide it out of 39.04. So 39.04 divided by 752 gives you 19.26%. Let's make sure I'm doing that right. 39.04 divided by 752 equals 3904 divided by 752 equals, oh, I'm doing something wrong. Sorry, it's 752 divided by 3904 equals 19.26. Yep. So the way the math works is you do 752 divided by 3904, and you're going to come up with that percentage gain. So 19% trading your beautiful Mondelez International. I love it. Great gain. Gorgeous chart. And I do agree with Evelyn. I think it's going to continue a little bit higher. All right, so let's go do some fast food companies. So Joel did an exceptional job with the candies. Let's talk fast foods. Both of you, everyone who is here, has heard of McDonald's. Most of you might have heard of Red Robin Gourmet Burgers, which is another stock. So since this particular example, we have 10% of our stock invested. 10%.
Can I throw out a random question here?
Sure.
What do you all think the stock symbol for McDonald's is?
Ooh, all right. What's the stock symbol for McDonald's, ladies and gentlemen? What do we got? What do you think the stock ticker is for McDonald's? So Nathaniel nailed it. David is almost correct. Evelyn is correct. Benjamin is correct. Kai, you're very close. Zeta Jones, you're absolutely correct. The stock ticker for McDonald's is MCD. Great job. Great job. So that is now here's a harder one. Who wants to try Red Robin Gourmet Burgers? This is a hard one.
I just let you know I always type this one in wrong.
I don't even know if Joel knows the answer to this question. So this
I know it. I just typed it in wrong again on my platform.
So Red Robin Gourmet Burgers is ticker symbol RRGB. RRGB. And what we're going to do in each one of these companies is you're taking your $1,000, which is 10%, and make it happen from there. So here is the next slide. Is these fast food companies, you're taking a total of $1,000. So you have McDonald's and you have Red Robin Gourmet Burgers. So 50% is $500. Beautiful job, Evelyn. Great job, David. Wonderful, wonderful work. So since they're both $500, same exact math as before. McDonald's is trading at $186 a share. And Red Robin Gourmet Burgers is trading at $27 a share. So who can tell me how many shares would you buy of each company? So each company, you have $500. You can buy 2 shares of McDonald's. How many shares could you buy of Red Robin? Vaughn says you could buy 18 shares of Red Robin, which is the correct answer. 18 shares of Red Robin. That is absolutely correct.
And even though, once again, in this example, even though you have less shares of McDonald's than you do of Red Robin, you still are equally invested. You still have of the funds that you want to invest in fast food companies and McDonald's, and half in Red Robin. So the shares are different, and we do have a little bit some change left over, but there's diversification in this sector between McDonald's and Red Robin. I'm not a big Red Robin burger fan. Are you, Jeremy?
Man.
What about you guys in the chat? Do you guys like those Red Robin burgers?
I love Red Robin, man.
Okay.
I love Red Robin. Benjamin says, why would it be 18? So Benjamin, if you type in into your calculator $500 and you divide by 27, that is 18.5. So 18.5, and like we mentioned earlier, we can only buy shares in full-on increments, so it'd have to be either 18 or 19. So we're going to round down to 18. Now, one of the biggest takeaways of this entire class tonight, boys and girls, hopefully, is that each and every one of you now know some companies that you can be an owner in rather than just a buyer, rather than just a consumer. So rather than going to McDonald's and always getting a Happy Meal, or going to Red Robin and enjoying the bottomless fries, or going to your local grocery store and getting some chocolate from Hershey's, or rather than having an iPad or an Apple iWatch, you can own part of the company and invest in part of the company. And I would tremendously advise each and every one of you here to take that mentality for the rest of your life, because this is how true wealth can be created and can be generated, is by owning companies that continually grow and create and produce products that people like, that people buy, that people use, and that make their lives better.
And we really wanted to do this this segment on mutual funds because I'm sure a lot of your parents and a lot of investors out there, it's, to do research on individual stocks is, a lot of work, takes a lot of time. You can't do it. But when you're in a mutual fund, you have the benefit of being in, owning a sliver of several different stocks. You also have the advantage of a professional manager, that this is all they do. is manage funds and manage stocks. And you also, instead of you paying the commissions, which we talked about in our second webinar, you can split those costs with everybody else. So there's a few of the advantages of investing in a mutual fund.
Absolutely. So boys and girls, thank you so much for being a part of this program. It has been a wonderful honor and privilege to serve you and to be here as a part of this. Does anyone have any questions before we wrap up and make magic happen? David says, I would like it if you could do the next kid video sooner, please. So I love it, David. We do have a lot of other videos. If you are interested, you and your parents can go visit reallifetrading.com/kids. And I have entire webinars and videos dedicated to just you, beautiful humans. I have a class called What is the Stock Market? What is investing? How much are you worth? What is discipline? Here is a stock review that one of my dear friends, his daughter actually did, Haley, Mattel versus Hasbro. Here's another class that Brad did, and here's a class I did recently called How to Get What You Want. So I'll make sure I put that in the chat pane. So feel free to check that out. Vaughn says, what's McDonald's? So Vaughn, McDonald's is the largest fast food company in the world. They've been around for over 70 years, I think, 60, 70 years. And they own more real estate than I think any other corporation in the world. They make a lot of hamburgers, and they're one of the most recognized companies in the world. So let's say McDonald's. This is McDonald's. It's a company that's here they're everywhere. So if you've never been to McDonald's, Vaughn, I would say check it out. Have your parents take you.
Did we do our conclusion yet here, Jeremy, with the back it up one slide there? Talking about math here and kind of the conclusion from everything, and the point that we want to get across the videos is that, you do your math exercises, and you have tests and whatnot. And, there's different ways to apply it. So one thing we wanted you to take away from this is math is always used in Wall Street. We used several different examples. It's used by businesses to figure out their operating costs and their profits. Is used by investors to figure out how much money they're making or they're losing. And so we want you to have a different perspective in your math class now. When you're there, and instead of like, it's math, think about how you learn to use the basic principles of math today, how it can be fun and challenging. And besides being in the classroom, you can use math in several different aspects of your life.
Absolutely. So boys and girls, ladies and gentlemen, friends from around the world, thank you all for being here and for enjoying and for partaking and investing in yourselves, investing in your brains, investing in your minds. It's been an honor to work with you. Vaughn says, no, thank you for the class. My pleasure, Vaughn. Thank you for your high energy, your answers, your participation. Evelyn, David, Kaz, every other person who is here. Kai Demerit, thank you for being here. Benjamin, thank you for being here. Boys and girls, have a wonderful rest of your week, year, life, month, day. Always know that your parents can help you invest in the stock market. Ask them as many questions as you can. Make sure they give you investments. Make sure you grow that money. Become wealthy and change other people's lives for the better over time. I will see you all later. Thank you all, and good night.